the most that I would accept would be somewhere around this key region or the mid-range of this consolidation, this month-long consolidation. If price can stay above this, happy days, we can target higher prices. Good day, traders, and welcome to this week's episode of Crypto Vibes with Vault. Really appreciate you guys tuning in week in and week out to show your support. And if you're new, just a little bit of insight that I cover global macro, equities, and crypto to give my opinions and what I expect the markets to do, which more often than not play out exactly as planned, which you just have seen in the short clip. So if you could hit that like button and subscribe to the channel, that would really help us grow. Now we've had the Fed rate hike recently at 75 basis points. And we're seeing the markets rally, we'll get to the fact as to why that is, in spite of this being a very negative or a bearish news for risk assets. But we also had the earnings report from large corporates, as discussed last time, which weren't too bad. But the housing markets right now paint a very different picture. So the housing markets kind of tend to be the leading indicator as to how the economy is performing, and I had shared this chart on my Telegram channel. I had discussed in my previous episodes that the Fed was trying to destroy demand, and by looking at the housing markets, the consumer sentiment, which again was less than the forecasted numbers, and by looking at the new auto sales recently, which was again a negative 10% lower than previous month. So suffice to say that the Fed is being successful in their quest to destroy demand. Now the main cause of concern here is that inflation is high, and if it remains high, then the US might be entering into a stagflationary period, which is not a good news because it's a combination of three negatives, which is the prices or the inflation is high, the unemployment numbers are high, and the economic growth is low. So now the rate hike was pretty much on track with the expectations. There was a minor probability of them going extra hawkish and ripping the band-aid straight off by doing a 100 basis point rate hike, which would again had been very negative and which would have spooked the markets in general, as the dollar would have rallied higher aggressively, and that is not a good sign and a cause of concern for the smaller economies, as dollar is a reserve currency. So the market response for the Fed rate hike was a drop in the dollar and the rallies in the risk assets. Now the rate hike was well received by the markets because markets had already baked in a 75 basis points when it sold off. Now if you look at this move here, this was days before the Fed rate hike. The anticipation was that it will be a 75 basis points, and there was a very little probability that it could be 100 basis points. So the market sold off before the news, and when the news came out, it rallied aggressively higher. So a 75 basis point was already baked in, and that's why we're seeing this rally higher. The markets are also rallying in an anticipation of a Fed pivot. And this is where it gets really exciting, because there is a lag in effect of the rate hike, the Fed rate hike, which is about 9 months. So the 25 basis point rate hike that we saw in March would have its effect in the month of June. And now with the two consecutive 75 basis point rate hikes, the Fed are pretty much anticipating that they are destroying demand, and obviously with the news, the consumer sentiment and the housing markets, as a couple of examples, are indication of the demand being destroyed. So there is a very high probability that the Fed would pivot probably in September or around end of this year. So the market participants don't want to miss the bottom, and that's why they're aggressively positioning themselves in risk assets, and the markets are rallying higher. Now, starting off with the dollar, if you recall, in my previous episode, I had mentioned that the dollar was coming into a key level of supply on this entire consolidation here before we saw that massive expansion, the massive sell-off towards the downside. The dollar tapped this region, and we're seeing an aggressive sell-off in the dollar right now. Again, if you look at the daily, I had covered that this key level was a very important level of SR on the dollar. Price tried to push higher, however failed to do so, and we're now seeing that sell-off in the dollar. So if price could manage to move back up early in the week, let's say Monday or Tuesday, and if it is not able to reclaim this level as support, I think that the dollar could push lower towards around the 104 region, which is a key level of support on the dollar. And if again this level breaks, then I think that the dollar would be trading within this range, and a 98 level on the dollar is pretty much on the cards. So this is what I'm expecting on the dollar. Now the S&P as well is coming into a very key level of resistance, and I have covered as to why this is important in my previous episodes. Range high, range low, key level of resistance or support, reclaimed back above, unable to hold, and an aggressive sell-off in the market. So key level for S&P as well. If price could manage to hold at this level, again, this is a key level of an important level of supply on the S&P. So if price could manage to really hold above this level, I think that the rallies on the risk assets could continue to the upside. Again, obviously, if this forms a deviation and we see price accepting below, then I think that there could be a sell-off towards 3,900 and then the 3,800 region on the S&P. On to Bitcoin now. And again, if you recall, in the previous week's episode, I had talked about this key level and this key demand on Bitcoin. Now we're seeing an actual momentum in the move away from the level instead of a chop. So we had 3 consecutive closes above this level, and that's why we're seeing the price rally. I specifically told that I would accept a move into this level, which is a weekly level of demand, as well as the daily on the as a confluence. So any move into this level would have been a great buying opportunity. What do we had? An early sell-off straight into this level, and price ripped higher, exactly like I expected it to. Now a slight cause of concern is if you look at the daily chart. Now price is forming a sweep at a level of resistance. Again, this was covered in the previous episodes. Everybody was getting bullish at this range when it had reclaimed a key level of resistance as support. Everybody was bullish. What happened? A quick unwind to the downside where a lot were liquidated or puked out of their positions. This is something that I covered in the previous episode. Price came back into a level of demand, and this is, so I had added to my position somewhere around here, and then half of what I added over here I added again at this level. I would have closed my longs, spot longs, if price would have broken below this, but it didn't. This is something that I was expecting. Price rallied higher, and now again everybody's getting bullish straight into level of daily resistance. Now for me, if price manages to reclaim this level convincingly, right? It is simply consolidating at this level. If price manages to reclaim this convincingly, this is again a key level of support, resistance. Reclaim this, and then I think that the risk is on towards the buy side, and a rally towards the 28,000 is very much on the cards. So this is what I am looking for from a bullish perspective. Again, this is not a very bullish setup. This is a swing fail pattern, and straight into a level of resistance. So if price again breaks below this level, I think that this probably would not hold, and we can see probably another retest of this level of demand, because again, just like over here, everybody's getting bullish that we have reclaimed a key level of support, and that is where the markets make a sell. So this is something to watch out on the Bitcoin chart. I want this to be reclaimed as a level of support convincingly, and then I think that it's game on towards the high side. And as you can see, we're talking there's an aggressive sell-off straight into this level. So yeah, so again, it still remains to be seen whether we would break market structure here or push towards the higher side, but right now there's not a very bullish setup in my opinion. Now, a positive factor is that the market hasn't really broken support or broken market structure on the lower time frames. So if it could get below this level, I think that short from this region towards this region is definitely on the cards. Oh, markets are kind of looks like selling aggressively right now. But still, if you look at the market structure on the daily time frame, I think that it is forming sort of a bullish market structure. However, this sweep is something that concerns me. So again, on the lower time frames, a break of market structure and then a retest of this level, and it's a very good opportunity to short the Bitcoin as well as some of the alts, which are also forming a lot of swing failure patterns on the high time frames. So yeah. On to Ethereum now. Now again, if you look at Ethereum, it is coming into a level of weekly resistance. Pretty simple idea. It was support, then support a couple of times, and now this is the first retest of this level. So this in confluence with Bitcoin forming a swing failure on the week on the daily time frames is again, which is something which is a cause of concern, and I do expect price to kind of push lower from here, take out all the leveraged longs who are expecting the markets to go higher from here, take those out, and then we can talk about higher prices. Again, on the daily, this is a key level to reclaim, and then we can talk about bullish price action. But for now, this is not really looking like a bullish setup or a place where I would be interested in longs. So that is pretty much it for this week's review. Obviously not a lot going on. Ethereum is in massive consolidation, Bitcoin forming a kind of a top formation. So again, I would be looking for that retrace back down where a lot of late longs and leveraged longs is topped out, and then I will look to position myself in some longs. So this is all that I'm watching on both Bitcoin, Ethereum, S&P, and the dollar. And I hope you guys found this insightful. If you did, just hit that like button and subscribe to the channel and help us grow. I will talk to you guys next week. Cheers, everybody.